Top 10 benefits of building a diversified investment portfolio. In the world of investing, there is one principle that stands out among others: diversification. When you diversify your investment portfolio, you're essentially spreading your investments across various asset classes, sectors, and geographical regions, intending to reduce risk and maximize potential returns. While the idea may seem simple, it is one of the most effective strategies to ensure long-term financial success. Here's a deeper dive into the top 10 benefits of building a diversified investment portfolio. 1. Risk reduction. The most significant advantage of diversification is its ability to reduce risk. Investors are often wary of placing all their money in one type of investment, as doing so exposes them to the full brunt of potential losses if that asset underperforms. With a diversified portfolio, however, you spread risk across a variety of assets, such as stocks, bonds, real estate, commodities, and even international investments. For example, while stocks might perform poorly in a market downturn, bonds or real estate may be relatively unaffected or even prosper during the same period. By balancing the risks of various investments, you lower the likelihood of a major loss, which is crucial for achieving long-term financial stability. 2. Consistent returns over time. Another key benefit of diversification is the ability to generate consistent, more stable returns over time. Markets are unpredictable, and individual asset classes often perform differently in response to economic shifts. While one asset class might experience significant growth during a specific period, another may suffer losses. However, when you invest in a variety of assets, their different performance levels tend to even out. This allows for smoother overall returns, as poor performances in one area are often balanced by better outcomes elsewhere. Over time, this can lead to better average returns compared to more concentrated, higher-risk portfolios. 3. Protection against market volatility. Market volatility is a natural part of investing, especially in global markets that are influenced by geopolitical factors, economic conditions, and investor sentiment. Diversification can provide protection against sudden, unexpected market fluctuations. When a certain sector experiences turbulence, such as a stock market crash, other investments within a diversified portfolio, like bonds or real estate, might remain unaffected or even perform better. By including a mix of asset types, you create a cushion against market shocks, allowing your portfolio to weather the storm more effectively than if it were concentrated in a single asset class. This protective benefit is especially important in times of economic uncertainty, as diversified portfolios tend to suffer less drastic losses during bear markets or financial crises. 4. Exposure to growth opportunities. Diversification is not just about risk reduction. It's also about creating more growth opportunities. By allocating your investments across multiple sectors, you increase your chances of participating in high-growth industries that may not be on your radar otherwise. For example, while traditional sectors such as technology and consumer goods might show steady returns, emerging industries like renewable energy, biotechnology, and artificial intelligence could experience explosive growth. Investing in global markets also provides access to fast-developing economies, such as those in Asia or Africa, where growth rates may outpace those in developed nations. With a diversified portfolio, you can capture opportunities in various sectors and markets, enhancing your potential for significant returns. 5. Tailored portfolio performance. Everyone has different financial goals, risk tolerance, and investment horizons. One of the key advantages of building a diversified portfolio is that you can tailor it to suit your individual needs. If you are young and have a higher risk tolerance, you might allocate a significant portion of your portfolio to equities, which have the potential for higher returns, but also higher risk. On the other hand, if you are nearing retirement and prefer a more conservative approach, you might invest more heavily in bonds or dividend-paying stocks that provide consistent income with lower volatility. This adaptability allows you to align your portfolio with your personal financial goals, ensuring that you are investing in a way that suits both your risk preferences and long-term objectives. 6. Preservation of capital. Preserving your initial capital is one of the most important goals of investing, especially for those who are risk-averse or closer to retirement. While it's impossible to guarantee that any investment will not lose value, Diversification helps mitigate the potential for significant losses. When one asset class drops in value, other diversified assets in your portfolio can help maintain or increase the value of your overall investments. For instance, during an economic downturn, bonds or precious metals like gold tend to hold their value or even increase in price. By investing in a range of assets that behave differently during economic cycles, you protect your capital and ensure that even if certain investments perform poorly, your overall portfolio isn't at risk of suffering massive losses. 7. Improve psychological resilience. Investing is as much about managing your emotions as it is about managing your money. The ups and downs of the market can be mentally taxing, and many investors make poor decisions when they panic during market declines. Diversification can provide psychological resilience because it reduces the volatility of your overall portfolio. Even when certain assets experience short-term losses, the performance of other investments may provide some level of comfort. For example, if the stock market drops but your bond or real estate investments are stable, you're less likely to panic and sell at the wrong time. A diversified portfolio helps you maintain a long-term perspective, reducing the emotional stress associated with sudden market fluctuations. 8. Access to specialized markets and sectors. Diversification also offers you access to specialized markets and industries that could yield substantial returns. Many investors focus on broad sectors like technology or finance, but other niche markets can offer high growth potential. For instance, sectors such as alternative energy, blockchain, or agricultural technology might be more volatile, but they could also offer tremendous growth opportunities in the future. Through mutual funds or exchange-traded funds, ETFs, investors can access specialized markets without needing to directly manage individual securities. This provides exposure to opportunities that might not be available through traditional investment avenues, allowing you to expand your investment horizons and potentially outperform the broader market. 9. Maximized return potential. While diversification primarily aims to reduce risk, it also can enhance the potential for returns when done properly. By allocating your assets across both stable, low-risk investments and higher-risk, high-reward options, you can create a portfolio that aims for optimal growth while managing the downside. For example, while bonds may provide steady but modest returns, high-growth stocks can add a layer of upside potential. 10. Adaptability to economic changes. Economic conditions are constantly changing, and different asset classes respond differently to these changes. Diversification ensures that your portfolio can adapt to varying market conditions, providing you with the flexibility to navigate through uncertain times. For instance, during inflationary periods, investments like commodities, real estate, and inflation-protected securities tend to perform better. Similarly, in a deflationary environment, bonds may outperform stocks. Having a diversified portfolio allows you to adjust to whatever economic changes come your way, ensuring that your portfolio is always aligned with current market conditions. Thanks for watching. If you enjoyed this video, please like, subscribe, and hit the bell icon so you never miss an update. Drop a comment with your thoughts, and I'll see you in the next one.